You're welcome back. Now let's look at the final requirement of this question, which is to prepare a statement of financial position. Now this will be very straightforward. Let's go into it. Okay, we have assets and a non-current assets. The first item we identified there is building, and from the question, the building was remeasured to 55,000, as you can see. Let's transfer this 55,000 to the statement. Okay, so the building is 55,000. Next is fittings. Okay, and from the question, the fittings was revalued to 27,000. So let's transfer it to the statement. Fittings, 27,000. Okay, so that brings the non-current asset to a total of 82,000. The next item is current assets. And there we identified inventory. And from the question, the inventory was remeasured to 15,500. Okay, let's transfer it. So inventory is 15,500. Okay, the next item is trade receivables. And from the question, the trade receivables was revalued to 4,800. So let's transfer it. We have trade receivables and it's 4,800. And finally is the cash. This cash will represent the cash that was brought in by B, the new partner. Okay. Remember, in the journal entry, we debited cash and we credited capital account. So this cash is what will show in the statement of financial position as 25,000. So let's have it there as 25,000. So the total of the three will give us 45,300. Okay. Alright. So let's add the non-current asset with the current assets. And that brings the total to 127,300 being the total assets. Okay. Now let's go on to the equity and liabilities section. Under the equity, we'll have the capital account of the partner. And from the capital account that we prepared, A is having a balance of capital of 61,980. C is having a balance of capital of 31,320. And B is having 23,000. The addition of these three gives us 116,300. We don't have any non-current liabilities, but we have current liabilities. From the question, the current liabilities that we have were bank, which is a bank overdraft, because when you have bank under current liabilities, it means you have overdrawn what you have in your account with the bank. So you are having a bank overdraft. I'm sure you remember that. And also we have trade payables of 8,000. So let's transfer the two. Okay. The bank is 3,000 being bank overdraft, and the trade payables is 8,000. The addition of the two gives 11,000. If you add the 11,000 to the 116,300, it gives 127,300. And our statement of financial position is balanced because the total assets is now equal the total equity and liabilities. This is how you prepare the partnership account on admission of a new partner. Thank you very much. See you in the next video.